Persistence, the secret of all triumphs. So says Victor Hugo, the French novelist. And Mr. Hugo is right. Persistence is the secret of all triumphs. That's how you triumph in what we do, and that is charting the market every day. Think about what charting is, my friends. It is following price movement. Price movement is reality. Everything else you see or read, you watch on the news, you read in the Wall Street Journal, Investor Business Daily, whatever it may be, it is subjective. It is given to you by another person through what they've filtered by the price. The price itself is pure, and it shows you what's actually going on, and it is the reality of the situation. That's what we deal with in charting, and that's what I encourage you to do every day. 10 to 15 minutes, follow the charts with us. We will cover reality. And as you learn to recognize reality, recognize patterns, see what's actually going on in the markets, you can actually use this to your advantage. It is knowledge about what's happened in the past, and based upon what's happened in the past, what may be happening in the future, particularly, with the patterns like the weekly vertical crossovers. When we see things happen in the charts that we know when these crossovers occur, they typically go for extended periods of time with pattern recognition and trend following, which is what we do. You don't have to ride the market down. You can ride the market up. You can ride the market down in something like an inverse fund where you can make money when the market goes down. Now, we're not a stock calling service. We're an education firm. We want you to practice trade with us. We have trade worksheets, daily market worksheets, weekly market worksheets. They're all in the show notes. They're PDFs. They're free. You can print those out and use those. Fill them out as you listen every day, at least with this comprehensive review and forecast we're about to cover. Print out the weekly market worksheet. At least fill that out once a week. Every time you do a practice trade, fill out the trade worksheet. If you want to supercharge your training, putting pen to paper is a magic all its own. It is engaging your mind, your thoughts. You're not just sitting there listening, you're actively learning. So please try to do that. And again, 10 to 15 minutes a day. How long will it take for you to get this? It might take many months. It might take years, but again, persistence, That's what gives you the triumph. You can do this. I mean, if you just look at these patterns where the S&P 500 crosses over going down, it goes down 4 weeks. There's certain times where it'll slide sideways and then activate again, but the weekly vertical crossovers are so helpful. That's what we talk about again and again and again on the ETFs we follow, which are 2 major stock indices, along with 20-year bonds and gold. Okay, let's jump into these charts. How did the week end? Very interesting, extremely interesting. The S&P 500 up a percent for the day. Look at that crazy wick on top. The market slammed up and then down. Look at the wick on the bottom, crazy. A green spinning top means indecision, tending up. Lots of indecision with those long wicks on either side. And what do we see? And again, these are Heiken Ashi candlesticks. They're different than your regular high open, low close. They're measured differently. We have a great training at the website under Heiken Ashi, Heikenashi. For those of you that are tuning into the YouTube channel or you get the daily email, you'll see at the end of this video, I'll have links where you can watch the Heiken Ashi training. You'll be one of 120,000 people that have taken it so far. It'll really help you understand why we use Heiken Ashi candlesticks. We want to see the average pace. And we're seeing in the weekly chart, what we're seeing happen here is a flattening. We had 4 weeks of strong down movement. That last week we had after the weekly vertical crossover, big down week. Had some Fed noise and the market, of course, popped up. But again, look where we are. Even with all that crazy action, still not enough energy to cross over going back up. So what do we see happening over the course of this next week? Don't know. What do we have happen a while back? Well, we had many weeks of an uprise going all the way until the 1st of March. Then we had things slide sideways and then start accelerating back up again. What's going to happen with this down move? Is the summer low over? Or are we going to see some continued down movement? It really just depends. So we are watching still. The overhang in the market is down. The weekly chart is still down. Green spinning top is not a open green up candle of strong movement. So again, we'll continue to watch, see what we see. That derivative oscillator still gaining downward momentum. Price percent oscillator is a little less than flat, heading up, but again, hasn't crossed over. Maybe weeks or months before that happens. Who knows? Again, we're going to follow established trends. What do we see on our 2-day chart? Well, the 2-day candle representing Wednesday and Thursday of this week, that is the 5th and 6th of June, was an up candle pushing right up on the 2-day. And then we saw the first day of this latest 2-day candle. This will finish drawing on Monday at the close of the market, pushing up through the weekly. So actually, when the market closed, as far as the candle goes, it had pushed up through it. Hasn't crossed over going up, but looks like it's headed that way. Derivative oscillator losing downward momentum. Price percent oscillator heading up. See what the 4-hour candles tell us. Well, they showed us that they popped up in the morning and then sort of mirrored that in the afternoon as far as the Heiken Ashi candlesticks go. Price percent oscillator heading up, derivative oscillator still gaining upward momentum again, pushing through in the afternoon on Thursday through the weekly trend line on the 4-hour chart and then up further during the day on Friday, both morning and afternoon. So that's where we are. Of course, we since pulled our down trades. And again, the price movement we had from the jumping in point, we'll just somewhere around, and again, using Heiken Ashi candlesticks, not as easy to do, but somewhere around the opening at 283, all the way down to a low of 273. So $10 within, what was that? 1, 2, 3, 4, 5, 6 days. Pretty amazing. And then, of course, the turnaround and the spike up. Again, this kind of volatility, you can see where the Bollinger Bands were getting tighter, and then, of course, have really stretched out with this latest volatility. So we'll continue to watch, and we'll let the charts guide us. If we do see the week start off with any kind of strong down moves and crossing over, going down on that 4-hour chart, want to be attuned to that. May or may not happen. If it does, we'll be ready for it because the 2-day and the weekly are still in confirmed down moves. And don't forget, overall, the market on our quarterly chart has been down. And remember, we'll cover that quarterly chart at the end of the month. That will be the end of the second quarter of the year. Now we go to the Qs. The NASDAQ 100 up almost 2% for the day, 1.93. But look how interesting the Heiken Ashi candlesticks are for the week. Even with the up moves that we saw after that drop on Monday, what do we see on the Qs? And again, I told you guys earlier, this is where I did my practice trade starting on the Tuesday after Memorial Day, ending on that Monday. But what do we see going on here? Well, we see that the derivative oscillator gaining downward momentum, price percent oscillator not heading at the strong angle it had been, weakened, still heading down though, as is the signal line, both heading down, almost parallel going down. And look at the Heiken Ashi candlestick, very interesting. Price laying right there on the 2-day trend line. But what's interesting with the Heiken Ashi candlestick is still below. I mean, it's just running right down the line on that weekly trend line. So even with all the pullbacks, or pull-ups, I guess we might say, since we were trading on down movement, we see that we have a spinning top, little bit of a wick on top, big wick on the bottom. So that's very interesting, something to pay attention to. Still a red candle. So again, lots of downward pressure. What do we see on the 2-day chart? We see a 3 days. So we see the Wednesday, Thursday candle pushing through the 2-day trend line. And then, of course, going further on Friday, this candle again will finish drawing on Monday, but pushing through on Friday the weekly trend line on this 2-day chart. And the derivative oscillator losing downward momentum, price percent oscillator heading up. So that's interesting. We'll continue to watch that, still in confirmed down moves. Now the 4-hour chart, what does it tell us? Well, again, it shows us lots of up movement in the morning and then sort of up, not as high as far as the wick goes in the afternoon. The body closed higher. And we see just a stair step going up on the 4-hour chart, and that price percent oscillator heading up also. So strong up movement there, pushing through in the morning, sustaining that, pushing through in the afternoon on the weekly trend line. So we'll just continue to watch and see what there is to see. Is all of this strength going to be renewed over the course of this next week, or might things pull back and crossover going down? If so, we'll be prepared, since the 2-day and the weekly are still in confirmed down moves, to actually jump in to that down movement. We'll just see what we see there. Okay, now we go from the 4-hour back to the weekly, and we move to bonds. Look how sweet they are. Remember, we've been in bonds for a while. Why? Because, of course, we had the 2-day chart crossover going up back on, well, we get to the 2-day chart, I can tell you. But it crossed over going up, setting us in for an up move on bonds, and bonds have just continued to move up for the day on Friday, 0.87%. Nice green up candle. The only cautionary note is it's just barely pulled further on that top wick. The body, however, did close much higher. Price percent oscillator heading up nicely. Derivative oscillator heading up. Nice weekly candle overall for us. Price movements well above the weekly trend line. Well above the weekly trend line. We go to the 2-day. What do we see there now? That crossover that put us in the position to look for a jumping in point. Since the weekly's been going up since like October, we see on the 7th, we see bonds moving up. That's the 7th of May. That crossover occurred that set us up to look for the 4-hour crossover and a jumping in point. We'll talk about that when we get to the 4-hour. I'll show you. Price movement well above the weekly, well above the 2-day. Had a bit of a pullback there as we saw that latest 2-day candle representing Wednesday and Thursday, but then bonds moved back up again on Friday. That candle will finish drawing, like I've said, twice already on Monday, just the first day of the latest 2-day candle. Derivative oscillator heading up. Losing momentum. Price percent oscillator heading up. Go from the 2-day to the 4-hour. What do we see there? Well, we can see those 2 days of declines starting on Tuesday morning, ending on Wednesday afternoon, and then things slowly started rising starting on Thursday and then through Friday. So derivative oscillator still negative, price percent oscillator still negative, but we have had some of a recovery in bond movement, which is nice. Now, the jumping in point I was telling you about, where bonds originally gave us the jumping in point, was back on the 23rd. We saw it cross over in the morning and the jumping in point in the afternoon, somewhere around, and again, you guys know I hesitate to call it on the Heiken Ashis, but somewhere around 126.65, and of course reaching a high on Monday, the 3rd of June at 132.58, and of course at the end of the day on Friday, 131.74. So again, if you're still in the trade, if you didn't pull out when things started rolling over, going down for 2 days, not a problem. Again, remember, once you jump in, you go from your 4-hour chart back to your 2-day and your weekly to see how strong they're maintaining. And then, of course, if you've already assigned yourself certain jumping out points, if you're 4% up and out, if you're, if you're looking at certain levels to hit, if you're selling a certain amount of your position, a third, a half at certain levels when you make certain amounts of profit and letting the rest of it ride on the market. All those things are different ways for you to make decisions. But keep in mind that we do have the 2-day and the weekly still in confirmed up moves. That 4-hour chart still negative. So pay close attention to the 2-day and the weekly. Bonds have done well so far, but still not recovered to the level they originally hit. Could be just digesting gains and getting ready to move back up, but Friday's up move of 0.87%, quite nice. And when I say move up higher than they previously hit. So keep your eye on it if you're still in that practice trade. I've gotten emails from you guys about folks very satisfied when they topped out back earlier in the week and took profits in bonds. So, what's interesting is as you watch bonds continue to move up, even when the stocks moved up, what's that telling you? Typically, bonds move down when stocks move up. So that's a sort of a place where money can go when the market's not doing well. Even the market was doing well these last few days. Bonds continued to move up. Well, they moved up on Friday after 2 days of down movement. So what does that tell us? Not quite sure, but we're sure going to pay attention to these charts over the course of this next week. Now, we go from bonds, lastly, to gold. And gold, we have good news. Ding, 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 ding. Weekly vertical crossover going up in gold. It happened. Gold closed the week with a nice, strong crossover going up. Huge candle. One of the biggest, it's the biggest gold candle we have seen in weeks, months. So again, big, strong gold candle. Derivative oscillators now positive. Price percent oscillator positive in gold. We've already moved. We had been in a confirmed down move since that weekly vertical crossover going down back at the end of March. And now that we are in June, we have this first weekly vertical crossover going up in quite a while. Go to the 2-day chart. And of course, we see four 2-day candles. This latest one's just a half. So that's 7 days of strong up movement in gold. Well above the Bollinger Bands so far on these last 3 candles. Price well above the weekly, well above the 2-day. Derivative oscillator gaining upward momentum. Price percent oscillator slamming up. We go to the, going to the weekly. We've already done that. Always go to the smaller chart. Start with the big chart first, go to the smaller ones. Lots of up movement in the morning on Friday, a little bit of pairing off in the afternoon. Derivative oscillator still losing momentum, and that price percent oscillator is at the very top and looks like it's going flatter. So what do you do about gold on Monday since we have a weekly vertical crossover? And of course, you guys want to practice trade. What you need to do, check the market at 10:30. You can just look at it at noon, see what things look like. Has gold blown off some of its energy, or does it appear to be moving up? If indeed it is, you can sure look at taking an initial position, jumping into gold, moving up. See how that looks at 10:30 on the 30-minute chart. Or some of you I know just like to always stay like I do on the 4-hour chart, and you can look around noon. And has it been an up morning or a down morning? If it's been a down morning, you might hold back and just let gold figure out what it's going to do and when it's going to reinitiate up moves. So watch for that. But again, let idiot hour in. That's the first hour of the day where the market makers are in charge, and anybody who's foolish enough to put in a market order gets hammered. And what you want to wait for is for things to settle out, then see what's going on, what's happening, and then you might look for jumping into a practice trade on gold. Folks, that's where we are as we end the week. It's been an exciting week. And again, we'll continue to watch these charts. Remember, overall sentiment in the market as far as stocks go, down. As far as bonds and gold go, up. So keep watching those weekly charts, 2-day charts, 4-hour charts. We say all the charts all the time. Doesn't mean you look at the market all the time. A couple of times a day is enough. Just glancing through these 4 ETFs or whatever stocks you're interested in. And yes, you can apply the lessons we teach here to stocks. There's a lot of other things you have to do when it's stocks, but you can sure apply our charting lessons when it comes to stocks. We always love to hear from you. We are running low on our 10th printing of books, so if you want one, order one now. We're going to have to go and get an 11th printing done here very soon. I will be continuing to write over the weekend Optionable Wealth. That is my newest book that I am working on. It's going to be all about options, and it's going to be about helping you put together an entire trading platform, the things you need to think about, whether you're in a money earning mode, you're in a mode where you simply want to manage your wealth and see that what you have put in your 401k, your retirement plans and all, is a virtual printing press, printing money for you week after week, month after month as the market goes up or down. Remember, we add a little sophistication with those inverse funds, making money when the market's going up or down. And I will tell you, over time, I made more money in down moves than I have in up moves. Is that not interesting? It just seems like overall, when you have these systemic market crashes, there are crazy opportunities for making crazy amounts of money. Now, we're not a stock calling service. As you're learning, we want you to practice with us. When you get really good at consistently doing this over and over, then you can combine your own knowledge, other things you've learned, books you've read, courses you've taken with what we teach, and you can do whatever you want with your own money. But I always give that caveat. We're not a stock calling service. We're an education firm. My friends, buy the book. You can see the link in the show notes. If you live overseas, email us, cw@chartingwealth.com. We'll send you a PayPal invoice for our overseas listeners. For some reason, Square won't take your credit card if you live in Australia, Canada, Africa, anywhere on that great continent, anywhere in South America, Central America. We love our Brits. We love our friends in France and Italy and Spain and Germany. Wherever you are, we'll have a book ready for you, autographed, ready to ship out. And again, cw@chartingwealth.com. You have questions, problems, concerns, let us hear from you. You want to really support us, appreciate what we do, become a Patreon member. Lots of great gifts and training for our Patreon supporters, including a once a month call-in, which we had back on the 5th of this week on Wednesday. And also, we review the charts you're interested in. Plus, we have great short chart training, long chart training. We have Bitcoin chart training. We got all sorts of great stuff. So God bless my friends. All the best from the whole team here at Charting Wealth World Headquarters.